Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
As you can see, we are on location. That is the Pacific Ocean behind us. We are at a beach on Oahu called Bellows Air Force Station. It's pretty cool. It is not a public beach behind us. Literally, we are sitting right now on a aluminum picnic table. 10 feet in front of us is our little house that we're staying in on the beach here. And then about 40 feet behind us is actual sand, and we have about 40 more feet of sand till the beach. It's literally right there.
Right.
It's pretty nice. Okay, that's not what we came to talk to you about today. We came to talk to you about this chart that came up. I think it's a very interesting chart. We'll talk about it because it's how this affects housing. Okay, Oana? The chart here says percent of balance 90 days delinquent by loan type. Now, we're hearing that we might be in a recession, which we probably could be, right? And that the recession would crash the housing market because everyone would just give up their houses, right?
So people are not giving up their homes. People are choosing their homes over everything else, which is normal. I mean, obviously, shelter is one of our primary needs. So are people defaulting on other debt? Yes. Are people defaulting on their homes? No.
Okay, this is what's interesting about this chart. This chart goes back 20 years. It goes back to 2003. And what it measures is the percent balance that people have that are 90 days delinquent by loan type. And as you can see, that red one is student loan. It's, of course, pretty low because of stuff that's happened politically recently. Credit card has historically been high. You see people say, Todd, credit card, it's never been higher. That's not true. Back in 2010, it was higher. 2011, it was higher. What's really interesting is mortgage. If you look at mortgage, look back at that. That's that yellow line. Look back at 2010-11. It was the highest ever. The most number of people ever had not made their mortgage payment. That other line below it where it says HE revolving, that's home equity line. Both of those are the lowest they have ever been. Literally, the mortgage defaults are the lowest they've ever been. Oana, let's say you lose your job, and your home payment is $1,100 because you had a mortgage, you bought the house 5 years ago. Do you just give up? You say, forget it. I don't have a job. I have $200,000 equity and $1,100 a month payment. I'm just going to let my house be foreclosed and go rent and pay $2,400 a month in rent.
Obviously, that doesn't make sense.
Okay.
So people are hanging out to their homes. People are making their home mortgage payments and their home equity payments for a couple of reasons. One, like Todd said, their payments are at an all-time low versus their income. The other reason is because they're never going to get this kind of interest rate again. Look, people have this opportunity for home ownership. Home ownership is very important. Obviously, we have to have shelter, and so that's the reason why people are making their payments. The other thing to keep in mind is, of course, that 42% of homes out there are owned free and clear, so those people don't have a mortgage payment. They're paying their property taxes, insurance, and so on, and that's fine. As a portion of income, these loans that are 2, 3, 4% are very affordable. So even when people get in trouble financially, they are hanging on to their homes. Lastly, remember, foreclosures take a long time, so people have opportunities to get things squared away with the bank and move forward. There are a lot more programs now than there were before as far as people who get in trouble and need a little bit of help. Banks do not want to foreclose. They want to work with people. And of course, if that's you, maybe you haven't had that experience. But by and large, banks have figured out that foreclosure is not certainly the first step. It is a last resort.
The first thing you're going to see is defaults, which we don't have. We don't have these people being late on their mortgage payment, the seriously delinquent mortgages. And if you say, but Todd, back in, okay, but remember, everything was different back then because banks literally could foreclose in 120 days. They can't do that. All the states have changed their rules for how it is. In Nevada, for example, it was 30 days notice of default, 90 days notice of trustee sale, 28 days to a trustee sale. Okay, that's 128 days. No, 118 days they can foreclose on your house. 118 days. Today it's almost 3 years because they have to go to mediators and they have to file notice of default numerous times. It's absolutely not. There's nothing to say. We're not saying there won't be a recession, but it's not going to cause housing to crash. And remember this too. those people with over 5 or 6% rates are only 4 or 5% of all homeowners. Yes, there are a lot of people who bought recently, but most people have either under 4 or 5, or they have 0 because they own the home. Like Oana said, 42% are free and clear. But remember this: even if 2 or 3% of those 2 or 3% of people lose their job, that's like 0.02%.
The other thing to keep in mind is that borrowers are better qualified than ever. So it is much harder to get a loan now. Borrowers have over 700 credit scores. They have good savings. They have good jobs. They have 401ks. There are other things involved this time around. So these borrowers are really well qualified, and they are less likely to be negatively impacted long term by life events that are just short-lived.
Okay, we just wanted to make a short video. We do not have invisible microphones. We have the little mics that we clip on. They're inside our hands because there's a lot of wind out here, and of course there's an ocean back there. But what else? What do we want to end the video with?
Okay, so if you like our videos, please remember to subscribe, hit the notification bell. Like the video, share the video, leave us your real estate related comments. If you have been out here to Bellows, leave us a note and tell us when and how you liked it. And I can promise you the cabins have not changed in 70 years.
These are literally, we may do a video of the cabin. It's a World War II style, like old base housing type cabin. There's a bunch of them up and down the beach here. These are hard to get in. You have to reserve these like a year in advance.
Right.
And the only way you can do it is if you were active duty, retired, or you are like a DOD employee or something like that. You have to, you can't just reserve it for somebody. You have to physically like be the one. Right. Fortunately, a lot of you guys know I flew jets in the Marine Corps, so I still have the ability to get on base and use the facilities and use stuff like these great beaches and everything. So.
All right. So aloha, and we'll see you on the next video.
All right. Bye.